You're watching Masters in Trading Live with Jonathan Rose.
Hey guys, what's up everybody? It's Jonathan. Happy Thursday. Welcome to Masters in Trading Live at Masters in Trading Live. I get on here every day the market's open, 11 o'clock Eastern Time. Go over the markets, share, we're live too, by the way. I share some thoughts, and once in a while we'll even share our trade of the day. This week, all about non-farm payroll, unemployment. Always watch it on your calendar, guys. The first Friday of every month is non-farm payroll, the unemployment report. That's a reason for the market to move. Every Friday, expect volatility to go higher. So that's something that we've been playing throughout the week. Today, I got 4 topics to cover. We're going to cover non-farm payroll, the first thing. We'll cover volatility, preparing for non-farm payroll. I want to go over Tesla. Tesla's moving a little bit. Check my notes here. And then I'm going to go over some earnings. We are getting very close to earnings season. Every single earnings season, we just flip the little switch and we use our earnings trade. We do the same thing every single earnings season. So I'll give you a little overview of that as well. Let's go over to the screen though. Okay, let's start here. I have here the QQQs, the NASDAQ, and what I also have here on the left is the list of the different VIX contracts, the VIX 9-day, the VIX 30-day. What's really interesting to me, the VIN is volatility, the N stands for near. So if I go on a shorter term chart, and we look at the VIN is 23-day measure of volatility. Many people watch the VIX. That's a 30-day measure of volatility. What's interesting to me, the VIF with an F, VIF, FAR, that's 37 days. 37 days away is the strongest of all the VIX measures. The 9-day is 20.54. The 37-day is 21.94. 3 months is 21.66. Why is the VIF the highest of all of them 37 days away? What's your answer? The election. The election is now 37 days away, so it's going to fall in the VIF. And that's why the VIF is the strongest of all of them. Let's look at the Qs because we have unemployment tomorrow. And so that's a catalyst for a movement. We are going to move. If we look at the Qs, this is what they look like. They've been super, super, super strong. Why so strong? The government's reducing interest rates. The government's supporting the market. China stimulus. The market is really, really strong. So let me go into my slide deck. Got a bunch of prepared remarks. I think you guys will like this. Laura, thank you for these awesome comments and questions. Laura is going to kick off our Masters in Trading Live. Busy week. Laura has joined the Masters in Trading Challenge. The Masters in Trading Challenge is where we could take anybody, give us 5 days, and we'll teach you how to trade options. Question number 1. How can I protect unrealized gains on current long-term holdings in my brokerage account with an option strategy? So what can we do when we're up a bunch of money on a trade? How can we protect? Well, let's use FCX. Let's say somebody was long FCX. Maybe they've held it back here. They have long-term gains. What can you do? Well, you can do a few things. You could sell upside calls to lock in some profit. You could also buy downside puts. Downside puts is like insurance. This allows you to protect long-term holdings. So if you're long, say from 39, and the stock is now trading 52, well, you could sell the 54 calls, take in some income. You could buy 49 puts to protect yourself from a down move. Lots of different ways you can protect your portfolio. Great question, and it's a great reason of why we have to learn options and widen our educational base. Question 2. So the first one, right? We could sell calls, we could buy puts. I know this group uses an unusual options activity scanner to generate ideas. Does anyone use various data releases? So data releases are going to be late. What we don't want to do is get a data release and make a trade after the data release. It's late, it's slow. This week is non-farm payroll. So I love the idea of how can you take advantage of an increase in volatility, right? This is bound to cause volatility in the markets. So we were thinking the same thing. And Laura, it's a really, really great comment because earlier in the week, using the same thought process as you're using, that there's an expectation of volatility because of non-farm payroll. That's the reason earlier in the week, I shared a trade idea. Hey, we can risk $330. We probably want to get out of this before unemployment comes off. And then the next day, we're able to take it off for $670. So this is the same kind of idea, but I'm not betting on the outcome of non-farm payroll. Instead, I'm betting that volatility is going to come into the market. It's just a little bit different thought, right? We know volatility is coming in the market. We don't know which way the market's going to move. So in order to do a bet like this, what happens when volatility comes into the market? Markets trade lower, right? So as volatility comes in this week, we're able to make a quick 150% because of this trade. Another comment, how could we play, I'm also trying to figure out how to play Tesla's Robotaxi event on October 10th. Tesla has a Robotaxi event October 10th. I love trades where we can get in front of a known catalyst. October 10th Tesla event is a known catalyst. So just to show that we're thinking along the same lines, Laura, great comment. 821. I shared a trade because of the Tesla Robotaxi event on October 10th. So you can always go back and watch the content. And I'd recommend you do that, guys. You can go on YouTube and Masters in Trading. If you just look up Jonathan Rose Trading on YouTube, you'll be able to find this. But the trade was getting long at 221 and also selling some upside calls in Tesla. So I got excited when I saw your comment, Laura, because you're thinking, well, you're thinking exactly like what we're doing. It's just you're a little bit late. And I think that just comes with experience and trusting yourself and your opinions. So if we look at Tesla right now, for those who did take advantage of this trade and are participating, we wanted to be in October because of that event. The trade that I shared was a covered call. And the covered call, we're getting long at 221. And then 270s right here are 480. So we're long from 221. We're up $20 on that trade. And then also, this is wrong. I don't know why this looks like this. We also sold the 270 calls for $6, and those are trading 470. So we're up $1.30 on the short call, and we're up $20 on the long Tesla. So love the ideas, love the thinking. We were just thinking this a couple of weeks before. We were anticipating this. So you're asking questions, waiting for the event. You want to be well in front of the event. You want to having those thoughts so when others come in, they're doing those trades and they're just supporting your position. Laura, great questions, really smart questions, very impressive. Earnings. Earnings comes around like clockwork. Earnings comes around 4 times a year. When earnings comes around, as a trader or as an investor, you need to switch around and trade earnings. Trading earnings is very different than trading outside of earnings. Here's an example, and I'm going to use Snapchat. Snapchat is a name that we've traded in the past. I'm looking at Snapchat's last earnings releases. Their next earnings release is going to be October 22nd, but previous earnings, the one before that, the one before that, the one before that, the one before that, the one before that. Here's how much Snap moves after an earnings release. Snap is very, very volatile after earnings. I would say the average of these, if I was just going to guess, is 27, 28%. So we can conclude that Snap moves on average of 28% after its earnings. Now, as traders, we need to look at the options and say, if we think Snap moves an average of 28%, which it clearly does, what are the options pricing in? Let's check. If I pull up Snap right now, the earnings are going to be out in November, because October 22nd is going to be after the third Friday. Third Friday options expire. So we can't be in October because Snap is not going to release earnings in October. It's going to release earnings in the November expiration cycle. Well, how much movement is Snap pricing in? Snap is pricing in 27%, because you can go 270 into 10,875. So they're pricing in about 27% over 43 days. Again, on Thinkorswim, you can just look at this number. You could also look at the value of the straddle, adding the 11 strike calls and the 11 strike puts. So now, if the options are pricing in, say, 27%, 28%, the expected move should be about 28%, right? Well, Snap has got earnings in 40, or those options expire in 41 days. 1 day is 28%. These are probably pretty well valued. Snap, to me, is not a great earnings trade. If those earnings were pricing in 20% of movement, maybe it would be a good do. But because the options are pricing in 27% of movement, I don't think that Snap is cheap enough to do an earnings trade. This is our earnings advantage tool. Our earnings advantage tool shows us the average earnings movement. So USM moves an average of 28.55% after it releases earnings. The move currently priced into the market in the options market is only 13.73%. So our tool is saying that USM is trading 14% cheap to where it should be valued at. Now, I've got to check this data. I got to make sure that it's correct. Let's look at USM. Now, this does seem too good to be true. The reason it is too good to be true is because there are not great options markets. So the data that it's factoring is not really correct. So USM is not necessarily a great trade, but this is how we back in to our different earnings trades. Now, what I always do on these presentations is I have a free portion, which we have in Master Than Trading Live, and then I hop off for our all access. Our all access are those in our Discord room, those going through our advanced notice program and our earnings program. In our all access, I'm going to go through an earnings trade that I think is excellent value, and I'm going to be sharing an earnings trade with all access for everybody else. Thanks for watching. We'll get on here tomorrow live 11 o'clock a.m. Eastern time.